Recognized for 5 minutes.
Yeah. Mr. Chairman, I want to thank you for the wisdom to recognize our country needs an expansionary monetary policy, the fortitude to stick with it when, okay, apparently you have some critics, and the creativity to go beyond your traditional tools in carrying out that policy. I listened carefully to my California Republican colleagues. I want to associate myself with Mr. Miller and his comments about a QRM definition that isn't too far from the QM definition. I heard Mr. Campbell criticize the Fed because he hears people saying that you shouldn't fight the Fed and it's hard to price risk. I'm pretty old. I've seen your predecessors carry out just about every kind of Fed policy I can imagine. And everybody's always muttering, don't fight the Fed. And the only time they ever say it's easy to price risk is when they're wrong. So the mutterings that the gentleman from California hears are fully consistent with not only your monetary policy, but every other monetary policy you could imagine. And I want to, Ms. Velasquez points out how important Fannie Mae and Freddie Mac are, and FHA. We heard testimony here from Moody's Analytics that if FHA hadn't been there, we would have seen another 25% decline in home prices. And this, in my view, if that had happened, America would look somewhere between Greece and Thunderdome. So it's fortunate that we have those institutions. We've got a lot of capital on the sidelines, as the gentleman from California pointed out. Investment needs funds, but it also needs people willing to take a risk. Some criticize that as reaching for yield, but if everybody is only willing to invest in investments where the appropriate yield is 2 or 3%, we're not going to have any small business lending. I've never seen a small business with a 98% chance of success. We've got banks out there. They've got a lot of capital. They face a lot of pressure to invest at 2 and 3 and 4%. I'm told by bankers that if they invest in something that has, say, an 8% likelihood of default, they don't face an 8% reserve or a 10% reserve or a 12% reserve. They get 100% charge to capital. What can the Fed do so that loans that are a bit, they're not just the 2 or 3% loans, are valued conservatively and the portfolio is valued conservatively, but not with a penalty valuation?
Well, I'd like to continue that discussion with you. The reserving practices are mostly tied to actual problems with loans, not with loans that are made that may be risky, ex ante. And in fact, one of the issues that has been an issue for a while is can banks put aside reserves against general risk of credit loss as opposed to losses in specific loans. So we have generally been supportive, actually, of banks doing more reserving so that they would have some reserves available against losses not yet seen or understood. But I think maybe we need to have a further conversation on this.
I look forward to that. Timing is everything in a lot of fields. Which is a pretty ideological city right now. And an ideologue either believes that it is always the right time to cut taxes, always the right time to cut spending, or always the right time to increase spending, or always the right time to increase taxes, or always the right time to do whatever their ideology requires. In your opening statement, you point out that the Fed is adopting a different approach. You actually have different policies for different business conditions, and would have a and your line is 6.5% unemployment, along with some other factors. The national debt is a growing cancer, but this is an economy that suffered a heart attack in 2008. And you don't administer chemotherapy while the patient is still in the cardiac ICU. Would the markets have confidence in Congress, and it's hard to think of whether they would ever have confidence in Congress, if we had statutory provisions which, like your policies, had a trigger and moved toward a more contractionary fiscal policy with, say, a 6.5% unemployment rate.
The time of the gentleman is expired, and the chairman can answer the question in writing. The chair now recognizes the gentleman from New Jersey, Mr. Garrett, for 5 minutes.
And I thank the chairman, and I thank the chairman. So let me just try to run through in 5 minutes 3 areas, what you talked about on remittances, what you talked about as far as some of the positive results, and if we have